Hello everyone. In this lecture, I will be explaining you about the classification of accounts. How you are going to classify the accounts. Classification of accounts can be done. There are two approaches. First one is traditional approach. And second one is modern approach. Okay, under traditional approach, let us first consider the traditional approach. Under traditional approach, the accounts are classified as personal account, real account, and nominal account. Okay. Now, when it comes to personal accounts are those of individual or any institution, for example banks, any organization. Okay, real account will be all tangible and intangible assets. Tangible and intangible assets. Okay, nominal accounts will be all expenses and losses and incomes and gains. Right, if we give certain examples, then examples of personal account. As in ABC's company account, right? Ram's account, Mr. Goel's account. Okay. Real account, for example cash, furniture, because all they are tangible. Land and building, tangible assets. Intangible assets will be as in goodwill. Then comes nominal account. Example of nominal account, as I said, it will be expenses and losses and incomes and gains. So some expenses, salary, rent account. Okay, they will be all your expenses, and incomes and gains could be sales, gain in selling of fixed assets. Okay, now comes modern approach. Under modern approach, the accounts can be classified under 5 heads. What are those 5 heads? Assets, expenses, liability, capital, revenue. Right? Assets could be furniture or cash. Expenses could be salary, rent. Liabilities could be bank overdraft. Capital, initial investments. Revenue, sales. Right? So these are two approaches under which we are going to categorize the accounts or classify the accounts. Okay. Now, on the basis of these, there will be some accounting rules that is going to apply on all the accounts. So first step is you need to identify your accounts on the basis of these categories and then apply the rules of debit and credit. Right? Now for personal account, rules of debit and credit for personal accounts. Right? For personal account, debit the receiver and credit the giver. For real account, debit what comes in and credit what goes out. For nominal account, it is debit all expenses and losses and credit all incomes and gains. This is according to the traditional approach. Right. Now if we come down to the rules of debit and credit under modern approach. Then for assets, increase in asset, debit, decrease in assets, credit. For expense also the same rule will follow. Increase in expense, debit, and decrease in expense or losses will be credit. Now comes capital. For capital, it will be the opposite. Increase credit, decrease debit. For liability, And revenue, the rule will remain same. Increase will be credit, recorded in the credit side. Decrease will be recorded in the debit side. Then the last one, revenue. Increase in revenue, credit. Decrease in revenue will be debited. Hope the classification of the accounts, the two approaches, traditional and modern approaches, and the rules of debit and credit according to the classification of accounts is clear to you all. That's it for this session. Thank you. Hope you understood the session. Don't forget to like, subscribe and share the video. And I'll come to with the next topic very soon. Thank you. Stay safe.